Well, it's been a pretty dreadful end of the year for the most popular emerging market ETF, and that is the EEM. It has now underperformed the S&P 500 by nearly 12% just in the fourth quarter. But maybe that makes it a bargain. Welcome to Trading Nation. Erin, Gibbs, and Max Wolff are your Trading Nation team today. Max, stocks fall sometimes, or ETFs fall because they're a good deal. Sometimes they fall because they deserve to, and they're going to fall even further. Which one do you think it is with the EEM?
So we think EEM is going to see a little bit of strength coming into the beginning of 2017 here. There's been a divergence pattern between EEM and the S&P 500. It's really started in around September of 2014, got super pronounced with the election here. We've seen massive monies rotate to the U.S., to dollar-denominated assets. That being said, we do think the EEM space is not done with some fundamental difficulties. We think the surging dollar and the rise in interest rates is going to put some pressure. There's been a lot of borrowing in the emerging market space. Most of it's borrowing in U.S. dollars, and that's going to put some repayment stress. And the last thing we really think is it's probably high time we differentiated in the EEM space. You know, it's kind of 90% of the world at this point. We might want to disaggregate a little bit. We think the really commodity dependent guys have a good year, and folks with a whole lot of debt to GDP ratio may have a hard time with weak currencies and rising rates.
Okay, Erin, Gibbs, and the EEM, let's not forget, I mean, we always say know what you own. This is really a China play. I mean, China, Taiwan, and Korea are 9 of the 10 biggest holdings. It's got a South African country thrown in there, or company thrown in there kind of for good measure. So if you're bullish on EEM, do you have to be bullish on China, or are you at all?
Yeah, I mean, this is actually 70% Asia-Pacific stocks. So just like you said, it's really an Asian-Pacific.
Kind of misnamed, in my opinion. But.
Yeah, and even Latin America is only 13%. So, I mean, this is very much an Asian-Pacific ETF. And so just looking at this one, much like Max mentioned, interest rates, the dollar, that's going to be challenging for these countries specifically because of the borrowing. You know, the 3 biggest holdings are Samsung, Tencent, and Taiwan Semi, so really dispersed across the Asian markets, and we still think that they're probably going to underperform the U.S. markets. So for us, we're not as positive. I don't see it rebounding and taking over the U.S. market. Certainly, there may be emerging market countries that outperform, but that's really up to an active manager, and definitely not this ETF.
Yeah. Last question. I'll go back to Max on that. Does this mean you're also a little more optimistic on China, Max, or the Asia-Pac region?
Yeah, so we actually think that the Chinese situation is going to be tough, but we think there's probably going to be a bid. So while we do think it's tough, we sort of have the inverse of what we have for the U.S. markets. Things look pretty good for the U.S. markets, but not as good as the market recent pricing action suggests. We think some of that unwinds in the first quarter. Likewise, the emerging market space looks like it's going to be some rough going. And the big thing for all these markets and even the energy prices here is we're going to see a lot more volatility in 2017 than 2016. And we're trying to guide our clients through what we think is going to be a fundamentally more volatile year than present pricing action suggests.
All right, Max Wolff, Erin Gibbs, looking at the perhaps misnamed EEM, or Emerging Markets ETF. Both of you, thank you. And folks, thank you for watching Trading Nation. Check out the live version on CNBC every day. We'll see you there as well. Take care.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you'll find videos from all your favorite CNBC shows. Be sure to subscribe by clicking right here. Click on the videos around me and watch the latest from CNBC. Thanks for watching.